Welcome to Real Smart, the real estate podcast you've been waiting for. I'm Spencer Kallick, a real estate and land use attorney at Matkins. On this show, I sit down with some of the most dynamic and accomplished voices in real estate to explore trends shaping the industry and uncover what truly sets great leaders apart. Hey everyone, and welcome back to the Real Smart podcast. Today, I'm joined by my friend Kevin Donner, Executive Vice President at Newmark, and a seasoned expert in institutional capital markets. More than 25 years of experience, Kevin has held key roles at firms like Eastdil Secured, Cushman, and now Newmark, advising on major equity sales, joint ventures, and capital raises across the country. Earlier in his career, he also spent time at Goldman Sachs, Credit Suisse, New York Stock Exchange. Gosh, he's done a lot, my friend, giving him a strong foundation in finance and investment strategy. In this episode, we're going to talk a little bit about Kevin's background, how it shaped his approach to deal making, where he sees the biggest shifts in today's office and capital markets, and what trends are shaping investor behavior in 2025. So without further ado, we welcome my friend Kevin to the show.
Thank you, Spencer. Appreciate it.
So Kevin, you've got a lot of different things going on, a lot of great background. I want to take you back here. How did you get to be sitting here with me today? Tell me a bit about kind of where you're from, how you came up in the business, and what brought you to our conference room here today.
Yeah, all those companies really make me seem old.
No.
But no, it's been a long road in how I got here. I'm from the East Coast, grew up in New Jersey, always interned on Wall Street and at banks, and thought that's what I wanted to do, because at that time in the mid to late 90s, that's what everyone was doing. Real estate really wasn't an alternative, an asset class or a job that people were really looking to get into. So I'd interned at places like DLJ, if people remember that, which Credit Suisse bought in college. And then right out of college, I actually got a job working corporate for the New York Stock Exchange. Didn't know what I wanted to do.
Do you have one of those cool jackets on?
No,
walking
but
the floor?
I spent a lot of time on the floor.
Okay.
So I worked for the corporation. I actually didn't know what I wanted to do. I sent my resume, I FedExed it, personal and confidential, to the president of the exchange.
Wow.
Somehow got on his desk. I got down to HR and they called me. They were starting a new management training program. So I was one of two people that started in that program and was there for 2 years. And it was a great exposure to the financial markets. So I did like legal compliance, did financial analysis and compliance, really underwriting companies that were looking to list or be delisted, and then typical client service. So I spent a lot of time on the floor, kind of being the conduit between the NYSE and the listed companies, and then the specialist program, which doesn't really exist anymore, where you'd physically trade stocks.
So they used paper back then, you mean?
They did use paper there.
Okay.
And they actually...
You're not that old.
By the way, when I first started, they didn't have the decimal system. It was all in fractions.
Were they using like an abacus or something? Or what?
The people were
it wasn't
impressed.
that long ago.
It was 16ths. No, I'm serious. I was on the floor when the Dow hit 10,000. I remember that.
Wow.
After 2 years, I was fortunate to get a job at Goldman Sachs, because I wanted to do something more in the merchant banking group, PIA. So in real estate, people know about Whitehall, but there's two separate groups, which is the principal investment area, and then Whitehall, which is all part of the merchant bank. And I was hired, that was March of 2000, just as they were really starting to do a lot of tech and telecom investments. And I was hired to start to work under someone who started a group to do the internal asset management group. Because at that time, either you went public or you were purchased by like Yahoo, right? If you remember that. So unfortunately, March 2000, the market turned. I pretty much started right when the NASDAQ and S&P peaked.
And you're like, this is a good time to go be a real estate broker.
It was awesome. No, well, actually even worse than that. So I spent 2 years doing tax losses, really selling investments for tax losses. Like there were times we were selling $100 million investments for $1 in what we called, actually, ironically, the RTC portfolio. I finished my analyst program there and got a job again with Goldman out in San Francisco in a private banking group. Again, timing not great because that was right after the dot-com bubble burst. So spent a lot of time dealing with distress in people's portfolios, but incredible learning experiences. Like throughout all this, there's things.
This is how you grind. This is how you learn. Get it under your skin and figure out how to get deals done.
Exactly. But at that time, I was at my desk at 4:40 in the morning, worked until 7. I had an opportunity to come back to New York with Credit Suisse, all the former DLJ people, and I worked there for 2 years. And really, the luster of working in banking wore off. And I was fortunate to meet who eventually became my boss and partner, guy Doug Harmon, who's a legend in the business, who really took me under his wing as like a mentor, which I owe a lot to Doug. And it's a name that people know, and he's just an incredible person, one of the smartest people to meet, and truly genuine. And we met when I was still in banking, got back to New York, and I really wanted to switch it up. I just got married, and I was ready to make a change. And he said, "Would you want to come in and meet with me at Eastdil?" And
Wasn't secured yet.
it wasn't secured yet, right? That was a year later. And I came in, interviewed with, it was still a really boutique place with Ben Lambert, who's the founder, and Roy March. And they hired me. I had applied for an associate position and they said, that's great, we'll take a risk on you. You have to be an analyst. So I just spent 8 years getting crushed in banking and started completely over as a 29-year-old analyst, which I think at the time was probably the oldest analyst in the history of the firm, and knowing nothing about real estate. Nowadays, they would never hire someone like me, right? Because getting back to what I said before, real estate is now, an asset class or a job that people really want. And I probably had a little bit of corporate maturity, which is funny to say. And I came in and said, just, give me everything to do. I was auditing classes at NYU at night. I was taking Argus classes and was writing the OMs, doing tours.
But that's, by the way, that's an underestimated thing. I feel like in hiring these days, people coming right out of college, right out of business school, they don't know how to operate in a corporate environment. You didn't have to be, told here's how to send, a letter, here's how to make a phone call. You actually knew what you were doing. And that's something I feel like that's so underappreciated these days, but is really important and probably why they took a chance on you.
Yeah, I mean, listen, it's like when you talk to people you're interviewing, they're like, what are the key attributes, right? It's attention to detail and attitude. And that's the thing you learn, especially in the banking culture, right? Attention to detail, because you learn quickly if you're not good at it, and your attitude, right? You check your ego at the door. And I think at each of these stops, I had to do that, especially when I had to start over and I was taking, orders from 22-year-olds telling me to, do research and check up on CoStar. And at the time it was, a little bit more archaic as to how we underwrote OMs, but it was an incredible experience. I mean, I said I had just gotten married and I kind of just listen, I need to kind of step away for 4 or 5 years and figure this out. And I worked, at the time you couldn't really work at home on the weekends. So you're in the office 7 days a week, and it was great. So we also had the ability at that time at Eastdil, and I think it's an important thing that we'll get to later, for junior people in our industry, I think even senior people, to be well-versed in every asset class. Because one of the key things being in New York, especially at Eastdil, is that you're a generalist. So, I mean, the way I learned Argus was, building Argus models for malls in Florida. And then first deal I worked on was a mall in Puerto Rico, and then doing multifamily. And then by virtue of being in New York, doing a lot of office. So the ability to understand each asset class is important, especially today, right? When you see what's happening, you need to pivot, right? You can't just focus.
Offices are now becoming multifamily. Industrial is now becoming data centers. I mean, it's a little bit of everything.
Yeah, exactly. I mean, it's funny about data centers, right? Because there was a time when telecom was big, right? In 2009, 2010. So we worked in New York, we worked on a fair amount of telecom buildings, one of which we sold to Google. So understanding that, I mean, right, there's mile wide and inch deep of latency and different points to discuss.
Sure.
But the evolution of the business, you just have to understand, how to go from one asset class to the other. Now, you're never going to be a specialist in it, but you have to, be acutely aware of what you know and you don't know.
Absolutely. Okay, so you were at Eastdil for many years, and then you decided, hey, New York is great, but I hear Los Angeles is way better, and decided to make the jaunt west, huh?
Well, before then, I had an incredible time at Eastdil. And I will say that I'm definitely forever indebted. They took a chance on someone who's 29, gave me a job, was able to move up pretty quickly. Very fortunate to have incredible partners, like I said. With Doug Harmon, there was a guy before that, Wayne Magan, who had since retired, and was able to learn under them, which was great. And then in 2016, our team decided to leave Eastdil and go to Cushman Wakefield, which at the time was interesting because, when you talk about cycles, what's really changed since the time I started, in 2005 to now, was back then it was more fundamentally driven, right? And then it became capital markets with compression and cost of capital. And now you have the confluence of both, right? So we left in 2016 at a time when it was going from you're facing more fundamental than cap rate compression, and very similar now, but it was a lot stronger, right? Because if you remember, the market was actually starting to cool off a little bit, and then it picked back up. So 5 partners left. We went to Cushman. They were going public, I think, a year later. And the idea was to recreate what we knew in terms of collaboration from our times in Eastdil and teamwork, and really grow the capital markets business. And LA is not dissimilar to New York, where it's like hub and spoke, right? Where a lot of the capital comes into the markets, and you work with the regional markets. And very similar to New York. And we were good at coordinating with the different markets. So our New York team then had the benefit of a platform. Getting back to the fundamental, when you have incredible leasing team, you have valuation and appraisal teams, you have property management teams, construction management teams. We never had that before. And then when you have a platform like that as you're underwriting,
it can be like the one-stop shop for your clients.
Yeah, and you have resources and you have really great people. And like when you're underwriting an office building, right, and you're not getting to the value you want, well, you look at the operating budget and how can you do better, right? So things like that. So We joined in 2016. It was a huge, I don't want to say huge gamble, but we bet on ourselves. And I think we were successful because we were a large team. All the partners served different functions. And then quickly we realized that a lot of capital wanted to come to the West Coast. And a lot of the clients that we knew well that were starting to look to the West Coast. And at the time, Cushman Wakefield in LA, didn't have a big presence, right?
They weren't one of the main players.
Exactly. And we realized that we were asking to pitch business on the West Coast. Myself and one of my other partners continued to fly out to the West Coast. And rightfully so. A lot of the clients were like, listen, we'd love to hire you, but you can't fly in and out of the market, which I can totally appreciate now because LA is tough to understand. I mean, there's a reason.
Place. Similar to New York.
Yeah, but you know what? New York's easy to understand. The city is, right? It's a grid. It's Midtown South, downtown. You have submarkets and micromarkets. Here, there's a reason why the Newmarks and the Cushmans and CBREs have 3 offices within a 10-mile radius of each other, right? Because
people don't want to drive that far to their office.
But it's just different. So, we realized it would be good to have one of us out here. And I'm from the East Coast.
You got the short straw.
Well, my wife is from the West Coast, and they figured if anyone was going to do it, it was going to be me.
Fair enough.
I never thought I'd do it. And then COVID happened. And I was living in New Jersey, and it was nice not commuting in anymore. New York, which is funny to say now, was supposed to be slow coming back. And having 5 partners in New York, probably not a good use of time. Maybe have one of us come out to the West Coast, which I chose to do in August of 21, which was not amazing timing for a whole host of reasons. New York has come back, and LA it's on its way back, but it's definitely a lot slower. And the pace is something I'm getting used to, because for 20 years or so, you're used to moving at this rapid pace of multiple deals across asset classes up and down the capital stack, and you're trying to be more opportunistic and trying to really recreate that here, right, across everything I mentioned.
So you were Cushman for a bit, then now moved over to Newmark. How's that been?
Correct. In February of 23, our team moved over. The team, my partners from New York and myself came over. It's been good. I mean, listen, it's been a tough time in the market. It's incredible to see what's happened with Newmark, even over my career, and give a lot of credit to Barry Gossin, as a CEO, because he's created this company that, you didn't really think about 20 years ago, and really grown the capital markets business. And I think, having Rob Griffin in Boston was an initial thing. And then, bringing our team over on the East Coast really solidified Newmark as one of the premier service providers. And I say that because of the platform, because we're trained to think about, okay, let's not just sell. How can we then integrate, all the other facets? And I joke, I've said it's like the quadruple Lindy, like when we're selling buildings. Can we sell? Can we finance? Can we lease? And can we do property management?
It's a one-stop shop.
Or just bring everyone in there. So I think that they've done an incredible job of making, Newmark exceptionally relevant, and even more than relevant. You're seeing what they're doing on the finance side, right? With Jonathan Firestone, they brought in here to work with Jordy on the East Coast and being one team and building that out and fostering this environment of success.
So let's talk about you a little bit more, because it's one of my favorite topics.
Thanks, Spence.
What did you come out here, and we've talked about it a bit. It's tough, right? New market, bring your family out here. Yeah. What surprised you about LA? In the real estate space.
Yeah, no, for sure. I mean, I had a very good idea of the time frame. Like I said, it was going to be a 3 to 5 year process. So I'm approaching year 4. And the tough thing is I spent how many years building up, the client base, and you say like a fraternity of people, right, that you're comfortable with. And a lot of my peers are now senior, and to try to come in and try to penetrate that is difficult, right? Because it's the same situation.
You haven't known people here for 30 years.
Why would they work with me, right? So
I could answer that question, but go ahead.
Thanks, Spence. No, but I was very deliberate about my approach. I didn't want to come out here and be a brazen New Yorker. And I don't mean that negatively, but I did enough research to understand a lot of people would come out here.
There's a different mentality, getting deals done, a little less in your face.
Exactly. So what I wanted to do, just like when I met you, and I joked that I was speed dating for a long time, that I wanted to just introduce myself and who I was and my history like this and what I was doing out here, and try not to talk about business, right? Because it would be, I think it'd be a little disingenuous, right, to just meet someone and say, how can we work together? And they're like, great, I've never met you. You're asking for business.
Sure.
So it's taken some time. Now, this downturn has been positive and negative, right? It's been negative.
People have a lot of time to hang out and
correct
and have a bite to eat.
And for me to get to know people more.
Sure.
And the negative is obviously the transaction volume. But the hope is that the foundation I built, and hopefully goodwill and getting to know people, will benefit going forward.
So I'd be remiss if I didn't talk for a second. I know that when you moved out here, you decided to settle down in the Palisades. And obviously you're newer to the Palisades.
Yeah.
I'm blessed to have grown up in and around the Palisades, but obviously that was a big shock to the system. Maybe you can tell us a little bit about how that has gone and
Yeah.
kind of where your feelings are at these days.
Yeah, I mean, I joke that nobody could have timed the move worse than me. Just between the real estate market and then we lost our home, unfortunately. And the thing about the Palisades is, coming from the East Coast and growing up in the suburbs, it's the closest thing you can find to a suburb. I didn't know about that. I had a lot of friends in our business that I'd known who'd lived there, and I ended up there because of them, and also because I moved in August 2021, right before my oldest was in high school. So we need to get our kids in public school. So we just randomly ended up at the Palisades, and it was the best thing we ever did because it really has this sense of community. It's walking, the people all know each other, which is exactly how I grew up and how my kids had in New Jersey. And then January 7th happened. And, we were far from the fires and we were, very late to leave and we took nothing. And I don't think people that aren't from here can truly appreciate it. Like my friends back east, and they're like, imagine the town we lived in being all gone.
Or imagine all of Manhattan being completely gone. I mean, it's not the same number of people, but in terms of square footage and size of the devastation, it's very much the same.
Yeah. So, I mean, the very drunk decision would have been to move back to New York right away and put my kids back in the town and just forget it. But we decided to stay and we're going to rebuild. And we may be one of the first homes, built in the Palisades, but I have two other kids. I have a kid going to college. I have two other kids, one going into high school and one going into middle school, going to 7th grade. And we just want to be part of a community again. Like I want the kids to have a semblance of a childhood versus moving around. And we didn't want to move down to the South Bay. We wanted to be back in the Palisades and we're going to do that. But it's something you never prepare for. And I think
you can't possibly prepare for it.
I think my kids going from COVID to the move to this are kind of sick of the pep talks. And there's no page right in the parenting handbook as to how to deal with this. And, just hope that it's going to be built in a different way. And I do think that Rick Caruso, and this is not a political plug, it's a good thing that he's really spearheading all this. And, I have a separate story about him, reaching out, but it will be a great place again, and we're going to be there for it. So we're going to be part of it.
I remember, I appreciate you saying that, and I'm happy to hear you say that. Obviously terrible what has happened, but I remember, was it like a year and a half ago, you and I met for dinner in the Palisades Village and Caruso Village, had a burger, hung out with some other guys in real estate, and that seems like a lifetime ago.
Yeah.
Are we ever, how far out do you think we are from being back to that kind of Mayberry environment?
I mean, I'd like to say sooner than 5 years because I'm optimistic. I mean, our home, hopefully we're going to be a house by January 27. Now, I joke that we're going to have ocean views for a long time and we're going to have ample parking.
You probably will. You probably will.
The hope is that, month by month, quarter by quarter, year by year, it gets rebuilt. And I do think that we're going to rebuild it, better than it was before. Now, where you're going to lose, right, was the great mixture of the old and new, right? Because I think what people don't realize about the Palisades, that it wasn't this super affluent area with everyone with these really expensive homes.
But it was a mix.
Totally.
A lot of people who are on fixed incomes or, a reverse mortgage or what have you, who are probably never ever going to move.
Yeah, and that's a shame of it. Hopefully when they rebuild it, it's done in a very tasteful way, that it's just not one big, housing complex.
I'm curious, you mentioned that Rick Caruso reached out to you.
Well, I just want people to know this. I don't know him at all, okay? And we had a brand new house, spec house, brand new, and we resubmitted the same exact plans that were stamped in 2019.
Wow.
And we figured, all right, we're going to rebuild this thing. It's going to be fast-tracked. Got turned back twice.
Really?
Yeah, turned back twice, which was shocking.
For what reason? Just they already proved it once.
Yeah. So you'd know better than I would. It's like different technicalities. So, I had reached out to someone I knew at Caruso, and I actually got a call from him 20 minutes later.
Wow.
And I just want people to know that because, here's a guy who doesn't know me at all, right? And it meant a lot. Like, I remember, talking to my wife, I'm like, this is incredible. The guy's, truly genuine, right? I don't want to feel special because I'm sure he's doing it with other people, but, he didn't have to do that, right? We finally got it approved, but it meant a lot that, that he actually cared. And our point was listen, we want to rebuild this thing. And we're not even taking advantage of the density bonus. We're building the same exact home, which you think would be exciting to build a home. We just want to get in a home.
Yeah. No, look, I think it's something that is very much missed in this. And already you can see in the post-fire, people outside of LA, or people who don't live in the Palisades or, people have moved on, right? People have, if you ask my clients in New York or other places around the country, it's not top of mind. But for people who live here, who are born and raised like myself, or who have moved here, it's very much still very present in the forefront of our minds. And it requires people to be kind and caring and look out for their neighbors and really focus on. So I think that that's a great story, and appreciate that Rick reached out to you. And did you get the house approved now? You're good
We
to
did.
go?
We got approved 2 weeks ago.
Because if not, I know a guy. I can
No, I
help you out,
appreciate
but
it.
glad to hear it.
I tried not to use my bullets yet.
It's all good. But it does require, I mean,
Yeah.
look, unfortunately, the city of LA is notoriously very slow on these things, but it does require a little extra pushing, a little extra focus, because you get people like yourself who are willing to reinvest. Most people, like you said, would have made the drunk decision, hop back on the plane, and they'd be off. But you're reinvesting in a community that you're still new to, which I really admire.
Yeah, and we're here. We want to be here, and we want to make it work. And just the hope is, take the personal stuff aside, that like our business picks up, right? Because it'll definitely make me feel a lot better about the move.
So let's talk about business picking up.
Yeah.
I've got to ask, you always remember your first time. What was your first deal in LA that you got done when you moved out here?
We did 555 Aviation for Tishman Speyer in El Segundo. Again, forever indebted to them, right? Because you do think when you move out, and I've
some Palisades guys.
Yes. So actually, Paul DiMartini, one of the reasons I moved there, because he lived a couple of blocks away, and I'd known him because we were close with the Tishman guys from New York. And I think the thing that surprises you that you have all these close friends in the business, and you move to another market, and you think you're going to get all this business. Everyone wants to be the $2 bill on the bodega wall behind the cash register, and it didn't happen, and it hasn't happened. And Tishman was great. They called up. This was something that Cushman had sold them, a former Xerox facility. They needed a capital markets team to do it, and they'd reached out to us. And listen, we did an incredible job, and we held firm on pricing. It was phenomenal pricing that you're probably not going to replicate again. But I'll never forget that. Just like I'll never forget my first deal in New York when I was 28, 29. That's a deal you'll never forget. And the unfortunate thing is the market really turned after that, because you feel like that was going to help catalyze more business. But yeah, that was, and that was a time when El Segundo had a great story.
Yeah.
Right, and it was a great story.
Still does, by the way. I think.
No, I agree. But just in terms of the office market, right? It was a lower cost alternative. You had a great story with one of the major tenants, Belkin, I remember, who was consolidating out of Santa Monica and moving down to be closer to their workforce and other people who can afford nearby communities, and also the travel time. And it had like the old industrial buildings that could be creative office. And they chopped it up in 3 different spaces, and it really had a great story that you thought would be able to, kind of segue into other transactions. And they tried, but the market just turned, right? I remember we held steady. They bought an interest rate cap, which was smart. We held steady on the debt, and we sold it to, it was a private REIT, so it was a cash flow deal.
So talk about capital markets. First of all, the people who are listening to this are sophisticated in real estate.
Yeah.
When you say capital markets, what does that really mean? What are we talking about? Is it just something cool that brokers talk about? Make it sound like you know what you're talking about in real estate?
No, that's a good question. Because capital markets to me I'm on the equity side. So I do nothing on the financing side. So, you try to address the needs.
You got people for that.
You have people, but you always work in concert with them, right? And I would never in a million years try to be a debt person. I think, and not because I don't want to, it's just not my business, and I don't know it. And our team is phenomenal. But when I think about capital markets on the equity side, it's familiarity, again, with institutional investors, middle market investors, private capital, and what their wants and needs are, right? And then also being familiar up and down the capital stack, right? Not just on the equity, but on the preferred equity and JV structures, right? Because we historically have not just like sold real estate, right? You try to come up with a strategic, solution for things. If you're not going to sell a building, so maybe there's a joint venture, right? And what does that look like? And we're fortunate that we've done a lot of these, so we can speak to term sheets, and we can speak to what's market, and we can speak to what the investors want, what the hot buttons are, but also across, all major asset classes, right? Really,
you're kind of the jack of all trades. You talked about that you've seen it all a little bit.
Yeah.
So you're able to talk to all those different asset classes, no matter what it is, and get your equity investors involved in these deals.
But the smart thing about it is not to think you know everything, right? I know what I don't know, right? But when you're talking to big clients and institutions, you understand, asset allocation shifts. Like I joked that 8 years ago, none of us touched industrial, right? At all. But then then you had to learn it. But we would never take on an industrial deal by ourselves. You'd get the industrial specialists involved. And that's where you learn the benefit of, not to be cheesy, 1 + 1 = 3, right? Of like relationship with specialists and success, and it leads to more deals. And you're seeing that now on other deals. Like I would never try to work on a hotel deal, right? You bring a hotel deal team in. Now, office, multifamily, retail, yes, but again, retail is very specific out here. We're bringing a retail team. It's just being well versed and having the connections. across the equity capital markets.
So everyone I talk to says, gosh, the capital markets are really tough right now. You read it in the newspaper, you hear it on the news, you hear it from clients. What is creating such a challenging capital markets environment right now? And because I like you to be positive, how do we get out of this?
Yeah. Well, I think, like what I was saying, it's really this confluence of things, right? It's not just fundamentals. Office is obvious, right? I mean, you look at the major markets where offices come back, whether it's New York or Dallas or some of the growth markets. I mean, LA, you see the leasing fundamentals, right? And yes, we sit in Century City, and this has been the beneficiary of like that sucking sound of other markets, kind of just converging.
Nowhere's hotter than Century City. We just leased the 19th floor right above us. So
correct.
Everyone wants to be here.
Exactly. And there's a reason, right? I mean, it's like a New York style market in the sense of like, I walk everywhere, right? And you don't need to go anywhere. You need to get in your car, and it feels safe, right? And it's clean. It's where people want to be.
Well, you're here, so that's, I think, the draw as well. Right?
Thanks, man.
Yeah, no, I figured as much. Okay.
But I think the tough thing right now is the uncertainty. Every day, no one really knows. I mean, I think everybody's been waiting for interest rates to come down, and I'm not going to prognosticate.
Are we going back down to 2-3%?
I'm not. I don't know, right? But everyone's been waiting, and as you're talking to lenders, and I have a lot of friends that run funds or they're at banks, and they're looking at their loan pools, and they've been waiting for a long time, right?
So are they going to keep waiting, or what's going to take to make that change?
I think you're starting to see some valuations, and I think you're starting to see people willing to sell their loan pools or certain loans. So I think that's important. But this protracted time period of elevated interest rates, the difficult thing with that is gets back to cost of capital. You look at asset. I mean, I joke that Core Plus wasn't an asset class a couple of years ago. It was core with cost of capital, right? So now you're looking at this. Okay, you have elevated cost of capital, right? The returns have required returns have gone up, right? By virtue of that, you're not seeing any development because I mean, listen, you do a lot of land. It's like when multifamily used to be a 5 yield on cost, and someone could buy trophy for a 5.5, or less than that if you're one of our clients, like 4.5, 4.25. But
it's a little plug.
Exactly. I'm saying, what's the premium for development?
Right? Well, as with all things, I learned a long time ago that you make your money on the buy, right? So it's not going to be, but unfortunately, you're having to buy things at higher prices, and then cost of construction is either higher or kind of where things used to be, depending on who you ask. But it's a lot more challenging because, well, for two reasons. One is you don't want to be the person who locked in a deal and then the next day interest rates went up or went down, or like one of my clients likes to say, this construction deal is only one tweet away from blowing up. And unfortunately, we live in a very volatile, we won't get too deep into politics, volatile and geopolitical environment right now where it's a real challenge to get deals done.
Oh, I mean, I've been working on this affordable housing platform, raising capital, and we were on the goal line with the term sheet. And then when Doge came in and started cutting, and they started talking about HUD, it blew up the deal, right? So you can feel super confident. You just don't know. I mean, it's unprecedented, right? I mean, you don't know.
So how do you? I mean, you've seen it all. I mean, this is kind of why I liked you're having the conversation of all the different things you've done. You've seen it all. Maybe you haven't seen this, but what's the way forward here? How do we kind of navigate these challenging waters, given your experience?
Listen, I think the first thing you ask, do you have a market seller, right? Or are you just like testing the market? So you have a market seller, which is great. You can be conservative on your underwriting. Use office for example, right? Nobody knows how to underwrite the residual, right? So anyone who's buying deals is super conservative on the back end.
So they're taking the long view. If you're buying an office building in downtown LA, you're not necessarily focused on, you'd like to make money tomorrow, but you're going to hold it for 5, 10, 30 years in hopes that things will come back.
Well, that's your underwriting there is like, how much of my equity am I amortizing out over time, right? And what percentage of the overall valuation comes from the residual, right? Which gets to, what Core Plus was, right? If you're 55% from the residual and the rest from cash flow, like that feels pretty good. But I think groups can be very conservative on the residual, probably knowing full well they'll do better than that, right? So they've now sensitized their downside scenario. So I don't know what happens. I think some of the debt has to clear through, right? And you're going to have to see some of the loan sales, right? And
we're starting to see some of those.
Yeah.
I mean, it hasn't been, everyone talks about all this distress. There hasn't been that much distress, but you're starting to see some of that.
I mean, what we saw, and it's tough to compare this to 2009 in the GFC, right? Because
it's a different flavor.
That was systemic, right? And that was across everyone. This is really isolated to real estate right now. However, what you saw about investors, people back then were underwriting, they were equity investors underwriting the debt, right? It's where they were comfortable. Now you're seeing that again, right? You're not just going to the big PE funds, right, that will buy a loan pool. You will go to individual investors who will underwrite the deal. They're prepared to possibly deal with either you get paid off or you buy at a discount or really understanding it. But that's where a lot of the deals will get made, right? If you have a lender who's willing to sell, right? If they're realizing that it's going to be a longer term process right now, they can repatriate some capital and the equity investor can come in and feel good about what they're buying.
So let's talk about the elephant in the room, the T word, tariffs. How are tariffs impacting your business right now and the deals you're seeing get done?
I think it's still too soon. I think you've definitely seen it on the industrial side, right? I don't know if you're at ULI. I mean, I think all of us got back and it was a big discussion, but it was still early, right? But you look at industrial.
The tariffs are also pumping up. I mean, the good and bad things about tariff is people are actually, they're collecting billions of dollars. There's money that's flowing back into the economy. Doesn't that help things at all?
It does, but you're also seeing like office employment, right? I think people are on a wait and see as to employing and taking more space, right? Industrial, yes, it probably benefits a lot more of the onshoring sites than the port sites. Like I know, we were looking at LA versus the Bay Area. LA, it's like 90% correlated between cargo counts and occupancy versus the Bay Area is probably more tech focused and probably less so, right? And what do the port markets in LA look like versus some of the industrial markets in Texas, right? And then you compare it to like Chicago or the Louisville, where you kind of have the main transportation hubs, and then what does it look like in the Northeast, right? The major markets. And I think the port markets where you're going to struggle the most, right, in the near term, because I think there's all the uncertainty.
So we've talked about industrial, we've talked about tariffs, you talked a bit about office. What is the trend in office you're seeing? Is it conversion? Is it just buying and holding? What is the, like, if you're like, hey, I'm taking out an office deal right now, or you're trying to entice one of your equity investors right now, what's the story on office?
It depends where.
So let's talk about LA because we're sitting in LA.
Okay.
What's the, obviously everyone would love to buy an office building in Central City, but let's call it downtown LA or maybe a kind of tertiary market in Los Angeles.
Okay, so
what's the play?
Okay, so you look at the different markets, right? Downtown LA is really a basis play, right? And for the most part, you need good seller financing, right? Because it's expensive. It's expensive. Even before COVID, we saw this where a lot of families were starting to value real estate because they realized that it was expensive, right? Where TIs were now $100 to $150 regardless, right? So downtown LA, their basis plays, and there's obviously more private buyers. Playa Vista, obviously, you'll have some more institutional buyers.
Yeah, we've seen Lincoln just bought a building.
And you saw Barings as well.
Yep.
We have 2 buildings out on Sunset in West Hollywood. Niche market, identifiable, boutique in size. One is a sale leaseback, one is a full gut retrofitted building, which we have a great mixture of families and institutions.
Hopefully by the time that this airs, that'll be sold and you won't have an issue, but those are good assets.
I hope so. But that's been interesting because you've had a great mix, right, of families and institutions, right? Because they understand the real estate. You're also not,
West Hollywood's a unique location.
and you're not subject to ULA, which is a big thing, right?
That's a huge deal.
If you're a buy, fix, and sell, versus downtown where you're seeing more families, right? Where yes, they're sensitive to it, it's priced into it, but not as much. Obviously, other markets, outside, we talked about, downtown.
What about San Francisco?
Okay, so
Denver or Phoenix?
Okay, so San Francisco is a market that I think a lot of institutions are betting on, right? Because again, identifiable, like who fills the buildings,
Sure.
right? And you kind of look at the cycles.
Get a cool AI company or something like that, you're in good shape.
Yeah, but I mean,
it's a good story to tell.
Listen, you have a story with the VC dollars, and you look at the history, and you look what's happened there, and you look at the companies. Now, there's a lot of construction there that they have to backfill, right? I lived there 2002 to 2004, and the whole Salesforce area in Mission Bay area didn't exist, right? It's still financial service oriented. And then it became really tech heavy and a good mixture. So I think San Francisco is a market that comes back as you're talking to investors and people are making bets there. I think here.
I totally agree. I was up in San Francisco a couple of months ago. So we have an office in Embarcadero Center.
Yeah.
And just walking around at lunch or on my way in the office in the morning, it was hopping. People were out, even though the weather wasn't great. Like people were out, people were having lunch, they were meeting people for coffee, they were maybe doing a little shopping, on their lunch break. It felt vibrant in a way that I hadn't seen even a month before, and certainly in a way I haven't seen in downtown LA recently.
But in LA, it's an elongated point in time right now, right? And it's not going to be gone forever. And the answer can't be yes, the Olympics is coming or the World Cup, right? It's something, it's something.
Well, that's going to help, hopefully.
It's totally going to help, right? And, cleaning up the city as we know, and just when tenants start expanding again, right? And it can't just be entertainment driven, while obviously it's very important, But this is a case in point, right? This is all financial service oriented, and you have talent agencies, and you have a market like this, and it's going to expand to other markets. It's just going to take time. I mean, I think the hope is something like a Santa Monica market, which is obviously a gem of a boutique market for a long time. It's a shame, right? You see what's happening with the office.
Surprising though, because it's near where a lot of people live, near where people want to have a quick commute. Obviously, some of the pricing has gotten a little overinflated over the years.
Yeah.
City has been a challenge at times as well. But what's it going to take for Santa Monica to pick back up?
It has to get cleaned up. It really does, right? And we're working a multifamily asset there. We still are. And the problem is, investors come in and they walk the streets at night, right? It's okay to do it at 2:00 in the afternoon. They walk the streets at night and they see what it's like, and they hear the stories and they pull the police reports, right? Which it's tough to argue that, right? When someone says, "Well, I pulled these police reports and this happened on this block," can't say no. Hopefully that comes back, right? Because that's the whole beginning of the market, heading south, right? Which ties into Venice is in an office market, but then into El Segundo and even further south. And it's just, those are the markets that should do well. And I don't like to say Silicon Beach because all these Silicon offshoots are kind of cheesy, like Silicon Alley and, Silicon Slopes.
Silicon Slopes, I haven't heard that
That's
one. Where's
Utah.
that? Utah, Silicon Slopes. Okay, fair enough.
That's like the Draper market.
I like it. So where are institutional investors prioritizing right now? What markets, what asset classes, who's killing it right now?
Okay, so the asset class is still multifamily still. Selectively industrial, depending on the markets.
What areas? Is this LA? Is this Phoenix? You hear a lot about Salt Lake. Where is this happening?
Well, Salt Lake, ironically, is like a port market, right? So people do love Salt Lake.
The lake.
Exactly.
I was going to say, last time I checked, there was no body of water.
Well, that's why I was joking.
Right.
You also have major transportation there, and you have huge cargo inflow. Phoenix, for sure. Las Vegas, the Texas markets, right? Houston and Dallas. LA, you get a lot of overbuilding in the IE, right? And betting on 14, 15% compounded annual growth. That's been impacted the most. And that's the interesting thing when you look at where industrial was. It went from a 5.5, 6 cap asset class to a 2.5, right? So that had the farthest to fall. Multifamily still a complete focus, right? For obvious reasons, right? Elevated rates, no new housing starts, very tough to buy a house. Right, so the fundamentals are fantastic, and especially in growth markets. Then the alternatives, which I laugh because alternatives used to be anything that wasn't like retail, office, and multifamily and hotel. So now the data center markets, the self-storage markets, the cold storage markets, still very much in vogue. Obviously,
everyone wants a data center.
Obviously, data center. I mean, listen, I come to you to ask about power. So when you tell me it's not possible,
I'm not a power expert, but I know a number of them, and it is one of the biggest limiting factors. And I get calls all the time from people. Oh, I got an office building, here, or an industrial building there. I got to turn it into a data center. I'm like, hold on a second. We got to look and see, do you have enough power? Where do the power lines come? Because otherwise, you may think you've got this great, wonderful idea and you've solved the world's problems, but you probably haven't. You've got to do a little more digging.
Well, I think when people talk about housing, right, there's all the offshoots, right? Senior continues to be a huge focus, right? As you well know,
all the boomers need a place to live, and we have not built anywhere close to the amount of housing that we need to build for our senior housing.
And unfortunately, I think during COVID, the industry to some extent was stigmatized, right, because of the good operators versus the bad. And now it's come back and they realize how underserved it is. Same thing with student housing, right? Student housing in the institutions. And then
when the economy is not doing as well, people go back to school and they need a place to live. It makes sense.
And a lot of these schools are underserved by housing. And then lastly, if I was going to look and ask us, it'd be on the affordable side, right? Because you look where you can make money, you get certain tax benefits, you have a good operator, you have a good developer, right? You can develop to pretty high yields, assuming you have the right ownership structure in place, and it's easily financeable, right? You can still get pretty accretive debt on it.
So part of what your job is, in addition to being kind of a jack of all trades, is personal connections and chatting with people. I don't want to ask you to give away too much of the secret of Kevin Donner's ways, but what are the kind of conversations you're having, over coffee, over drinks, over a bite to eat with your equity investor, capital markets clients? What should they be focused on right now?
One, I want to understand how fundraising is going, right? Because it's very indicative, right, of what the investor mentality is, right? It starts kind of with that, but really understanding, some of the out of favor asset classes when they're going to start investing again, right? I think that's important. It's very easy to be like, oh, I want multifamily. What are you looking for? I want industrial. I really want to know when they're going to get back in office. While jack of all trades. I mean, you want to do, I mean, most of what we've done over the years has been office, right? And you want to get back in that, but when it's not happening, you need to understand the other
pivot.
You need to understand the pivot.
Yeah.
Exactly. So, and then, what are your return metrics, right? Where it used to be IRR driven, and then it was levered cash on cash driven, and, multiple in some extent, but what are they solving for now? And what are investors looking for? So I think that's the most important thing, because that's constantly changing, right? That evolves with every cycle.
So if we were sitting here, call it 2 years from now, and God willing, we both will be, have you back on the show, what are we going to be talking about? What's going to have changed, and what's going to be the next hot thing, right? There's always one hot thing, right? Right now, data centers. A little bit before ago, it was, outdoor, storage. What's the next hot thing? What's it going to be?
I don't know. I mean, you keep hearing about all these different, niche. Like I know someone who's done these, airport deals, right, where they're buying hangars and they buy the operations, and because they're on ground leases, you're able to finance with municipal bonds. So that's interesting. So like something like that. I mean,
that is a hot take. I haven't heard that one yet. I like that.
Oh yeah. I mean, not everyone can do it, right? You need to understand it.
You got any hangars for sale?
No.
Okay. But if someone had some money to place, you could find a hangar.
But no, but so it's that business. You look at the studio business, and very similar, right, with the operations. So that, whether you're the operator or the owner, right, you actually buy the fuel wholesale, you sell it retail, right? You do the catering, you do the servicing, right? You do the renting and the hangar. So it's
you say this like I know this, like I have an airplane or something. I'm lucky to go be like, economy plus or something.
No, but I heard, I don't know, but I just listened to a presentation on it, and they accumulated like, 15 to 20 different sites around the country. And that to me was like really interesting and niche. Now, just like, you said iOS, I think that has still, remains to be seen kind of if that's proven.
Still around, yeah.
It's still around.
Well, it's just easy because there's not a whole lot that you need to do other than buy the land and lease it out. You don't have to build something necessarily.
Yeah. So I didn't answer your question, right? Because I just don't know.
You answered the question that you wanted to be.
No. I just don't know. Listen, if I knew what that was, I wouldn't be doing what I'm doing, right? I would be going on the principal side and find someone who specializes in it.
Well, if someone has a good deal for you, maybe we'll make that happen one day. Well, let's pivot for a second. You've been doing this for a long time. You've had a lot of different types of bosses, of colleagues, of businesses, but I'm sure that there's some things that remain constant for you. So what is your approach to leadership? How do you think about leadership in your business?
You take a little bit from every senior person you've worked with, right? And you really, I grew up playing sports. Like my dad said to me, he's like, the best things in life you can learn from sports. And it's true, right?
You were a linebacker? Is that?
No, I'm 4 foot nothing.
What'd you play?
I grew up playing everything, but I played soccer and lacrosse, and I played lacrosse in college. But you learn about the teammates you like, you don't like, and especially the coaches you like, you don't like. And I can go through every company I had, and I probably took more away from than the senior people I didn't like than the ones I liked. And I swore I would never be like that, if I was in a position of being senior. And I don't like saying leadership and senior and people who work under me. I try to impart a different style, right? I never liked partners or bosses that were too controlling, right? That give me the latitude to do things. I remember early on in this business where you'd work on a deal and not being aware of what happened, or being included on conference calls, or being invited into meetings. And I try to do that as much as I can now, and being overly inclusive and share. And it's never intentional if I don't. Listen, we all know also now in our business too, when people send emails, when things are intentional. And I try never to be like that, about, not leaving people off or putting someone in a certain spot in the email, and trying to be all inclusive, and really giving the junior people, the ability to grow and not be overwhelming. Up until 5 years ago, I had Argus on my computer, and it got taken away because you didn't, you liked getting under the hood and understanding, but you have to let go a little bit. And I learned with looking at OMs, I used to mark up all the OMs, and I really stopped marking them up to the extent, because it's not fair. Because I remember the first OM I wrote, and it came with blood all over it. And I came back to like the senior person, like, wow, that was great. I'm like, what are you talking about? I don't even see black on this. So I learned to not be as dialed into the minutia like that. Now, if there's details that are important to the deal, yes, but I try to give, a little bit of leeway with the junior people. And also the other thing you teach them, and I learned this early on, is to be nice to everybody. I know it's a very basic concept, be nice to everybody.
No, it is a basic concept to be nice to everybody, but most people are not that nice. And it doesn't necessarily come across the right way, because you and I, I'm biased, we're nice guys. Yeah. And then you see people who are complete assholes. And you're like, wait a second, how can you be like that and expect to get business done and get deals done? But somehow it works for them. But I've never understood it. But you got to be nice to everybody.
But what I'm getting at also is like if you're working on a deal and you're dealing with like a junior person, your client or an investor, right? They realize more than you know how nice you are to them, right? And there's been years later you'll run into them and who knows? They may be your client.
They probably will be your client.
They may be your boss. And that's happened time and time again where I've run into someone, they're like, you were really cool to me when I was young. I was like, awesome. Can you give me a deal? But no, but you learn, it's a very basic concept of life, but it's not like that. And I take away a lot from like people, even partners or bosses I've worked with, even to this day. Like one thing, I may not be the smartest person. I don't, when people say that, I usually think they're the smartest person, but I'm definitely not. But
you're smart.
I think generally have pretty good. I'm saying
doing.
Generally have pretty good EQ and understand people. So I understand when people are saying things a certain way in certain actions, and that's something you never forget. And you try to teach that to the younger people that everyone knows, your intentions.
I think that's some really, really good feedback, and hope that your team and people you interact with are taking those life lessons and putting it into their business. Talk to me, for a little bit of time we've got left. What are the things that are the intangibles? What are the things that make you succeed as opposed to, there's a million brokers in LA. What is the Kevin Donner way, or the things that help you get deals done that others frankly don't?
I think one, you definitely have to listen, right? You're not always right. And God knows I'm not always right. Two, like I said, being nice and just, becoming friendly with people and establishing a good Rolodex of people that you generally like being around. And that's important, working with people you like. Now, we're always forced to being partners or working with someone we don't like. But I think it's just a general personality thing. I like to think that I get along with everybody. And also I have trouble sitting still.
You we both, my friend. I can't possibly sit still.
I really, but I say it because, if I'm not
surprised we've been sitting here this long.
If I'm not talking to somebody, right, I feel like I should be calling someone or doing something or learning something, or, is there a follow-up here, a follow-up there, like not very good at sitting still. Now I've learned over the years on the weekends to kind of like relax a little bit.
Take a breath.
Take a breath. But I also think, being acutely aware of what you should be doing in this business and what you should be learning. And also, I realize I don't know everything, and to raise my hand and really reach out to people. And I think that's the first thing you're taught when you're an analyst.
Well, you can reach out. You can reach out to me anytime. I'll be happy to answer any questions. And we talk.
I'm grateful to you, right? You and I met when I first moved out here.
I'm
saying you didn't know me, and we've been, I think there's been a lot of reciprocity, right? Of, I think of the world of you and, making introductions, and you doing the same thing with me. You've been a phenomenal friend, and really been helpful. And hopefully, I'll continue to grow out here. We'll continue to do this. And
we got to have some fun while you're doing it too.
I know.
If you can't be hanging with good people and getting good deals done, what else is this business about?
No, but I think success, whatever that means, I think it's just being able to really get along with people, right?
So we hopefully got a lot of folks who are listening to this. I'm curious, what are you not doing that you want to be doing right now? And maybe someone out there could help you with.
Selling more real estate.
Well, amen for that. Let's do it.
No, seriously. And, the other thing that I really love doing is making introductions, a lot of, marrying capital together with opportunities.
By the way, it seems like everyone knows you. I know you've only been out here for a couple of years, but everyone's like, I talked to Donner. I love Donner. He's the man. It always comes up. I don't know why. You must be doing something right, or you're paying someone, or you got, some deal going on that
I appreciate it. And again, by doing this a long time, you establish a lot of relationships. And I'm fortunate, right, that I've been bi-coastal. And a lot of people
that's an edge that not everyone has.
A lot of people in New York that came out west, and people have gone back and try to connect, opportunities with capital, because I know there's a lot of, capital has been raised, some of the bigger funds, or understanding the middle market funds and what they want. So I do appreciate that. And, while it may not turn into something now, but like you said, it's the long game. And hopefully, there are some residual benefits at some point.
I'm very confident that there will be. Well, look, I don't want to take more of your time. I want to say thank you so much for joining us today on the Real Smart podcast. You are real smart. I am not so much, but at least I get to hang with you and learn from you. And hopefully all of our listeners and viewers get to as well. If you haven't, You should subscribe to this podcast so you can catch more awesome episodes with folks like Kevin. And nothing more than that. Just want to say thank you and appreciate you.
Thanks, man. I appreciate you.
Absolutely.
As always,
Kevin.
thanks, man.
Appreciate it. The content of this podcast is for the general informational purposes only and does not constitute legal advice. Listening to this podcast does not create an attorney-client relationship between you, the host, guest, or Alan Matkins. You should not act or rely on any information discussed without first consulting a qualified attorney regarding your specific situation. Any opinions expressed are those of the individual speaking and do not necessarily reflect the views of Alan Matkins or its clients.